What's going on, guys? Welcome back to Clay'sCoins. I believe competence creates confidence. This is not financial advice. Go ahead and hit that like button and subscribe button. We're going to get right into the video right after a word from Webull. Webull is the affiliate of this channel. You guys can go check them out. You can trade stocks, crypto, options, anything you like on there. They have charting on there that you guys can do right on the application. It's really convenient. It's actually pretty user-friendly too. But if you set up a new account with them, deposit any amount and you can get up to 12 free fractional shares worth up to $30,600 with my exclusive link in the description or the pinned comment down below. It really supports the channel, guys. It lets them know that I'm doing a good job and that you guys value the content. So without further ado, today we're talking about Ethereum. Of course. What else would we be talking about right now? The merge has been completed. So Ethereum has now merged from proof of work to proof of stake. So Ethereum mining is gone. Now, if anyone is mining Ethereum, they're mining Ethereum Classic or whatever the hard fork they're going to go with. I believe they're keeping it with Ethereum Classic, but that's what it's going to be. Ethereum, as we know it, is no longer mineable. It is now proof of stake, which is not a great look for Bitcoin because it makes Ethereum incredibly environmentally friendly, like 99% more efficient environmentally than Bitcoin is now. And that's a huge win for NFTs because if you guys have any experience with NFTs, NFTs are without question most popularly traded on Ethereum network. Polygon is, kind of there, and I mean, Phantom has their Solana NFT wallet, but, I mean, a great majority, and almost all major big name NFT projects are made on Ethereum. I mean, BAYC, CryptoPunks, the list goes on and on, guys. If it's a big project, it's a big NFT, it's probably been on Ethereum network. And now they just got so environmentally friendly because there's no mining. It's not this ridiculous proof of work system anymore. We're actually advancing. And to be completely honest, guys, it's awesome to see Ethereum really get this done. So often in crypto, we hear of projects working on something, planning on something, having things in development or in the works for years on end, and then the project dissolves like Luna. Ethereum was really able to deliver on a promise that they've made a long time ago, and that's like one of the best things you can see inside of the cryptocurrency, the crypto sphere, as we like to call it. It's incredible, guys. It really is. It's awesome to see a project as big as Ethereum live up to what they said and, put their best foot forward. So it really might be. People talk about what's going to be the Ethereum killer. Ethereum might be the Bitcoin killer. Let's be real here because this is about to go crazy. So today we're going to talk about a couple articles about Ethereum, the Ethereum merge, and look at Ethereum Classic, their price movements as of right now, today, the day of the merge, and one sleeper pick that I think is going to skyrocket in price now that Ethereum is going to be thrown out in the media as much as it is. Alright, guys, this is a longer article, so usually the articles I bring you guys say 2 to 3 minute read here, which is a bit much. I mean, obviously, if you're just sitting there reading in your head, skimming through, yeah, it's going to be a pretty quick read, but actually dissecting it and figuring out what you're reading, deciphering it, going over it, and regurgitating, and then processing what is actually going on with some commentary takes much longer. But this one is 9 minutes, which is just, about 4 times the length of the normal, 3 to 4 times the length of the normal articles I read. I'm here for it, though, because what else is it about then? How the Ethereum merge ends the environmental debate about NFTs. Ethereum is set to transition to proof of stake, which means the biggest network for NFTs will become environmentally friendly, and that transition, that merge, has officially happened as of today, the time of this recording. It is September 15th, and the merge has happened. NFTs have been widely criticized for their environmental impact given the energy requirements of top NFT network Ethereum. Ethereum's upcoming merge is expected to cut the network's energy use by over 99%. One of the largest criticisms against NFTs will be rendered obsolete in just a matter of hours. As of now, it is. And that is because the environmental impact of Ethereum, the largest network for NFTs, will effectively be abolished after the blockchain completes the merge, its long-awaited transition to proof of stake. Once the upgrade is complete, the move will reduce Ethereum's energy consumption by more than 99%, according to the Ethereum Foundation, citing data from one of crypto's best-known environmental critics. It's a change that is sure to have considerable implications for Ethereum and the crypto industry as a whole, including NFTs. That's going to go for blockchain gaming, any Web3, music or anything like that. This is going to be huge. NFT music has started to come up big over the last few months. How did we get here? We're going to skip a lot of the quotes for now and just kind of go over the basics because, like I said, this is a pretty large article, guys. At the moment, which is now in the past as of the time of this recording, so this is going to be more so around what Bitcoin is looking like. The Ethereum network was secured by a decentralized network of quote-unquote miners who run powerful computers that compete to solve complex cryptographic equations, earning ETH cryptocurrency rewards by creating new blocks and validating transactions, which is how things can happen. This is why when you do something, it costs gas. Gas is essentially an incentive for miners to use their computing power to solve these cryptographic equations and get the process done that you would like to get done. This proof-of-work mining model is similar to that of Bitcoin, and the results of the math equations are ultimately irrelevant. They're simply being performed so that miners are required to expend significant energy to solve them and win rewards. That process protects the Ethereum network and makes it very expensive for any party or group to try and take it over. It's essentially they created their own paywall to even enter. As Ethereum has grown from its 2015 launch and decentralized apps and use cases have gained steam, the drawbacks of that model have become more and more apparent. In 2021, as network activity increased, partly or arguably even largely due to the explosion in popular NFTs, I would also say in meme coins too, because a lot of meme coins were being built on Ethereum, the value of ETH, which is necessary to conduct transactions, likewise increased. As the value of ETH increased, it thus became more profitable to mine, and as mining activity surged, so too did Ethereum's energy consumption. So it was just a snowball effect of building up the energy consumption, but it seemed at the time it was almost like, these good things kept happening. ETH is going up, more people are going to want to mine, it becomes more profitable to mine, and then bang, it's like, oh yeah, that's right, all of this is really bad for the environment. I'm not exactly sure what these units of measurement are, but according to crypto critic Alex DeVue, I don't know how to pronounce that, the amount of annual collective energy used to secure Ethereum rose from just over 9 TWH at the start of 2021 to over 81 TWH at the end of the year. That is a literal 9 times. That is squaring that number. That's absolutely insane. The number peaked at nearly 94 TWH this past May and currently sits at nearly 80. What does that mean? Digiconomists suggest that Ethereum's decentralized network uses up as much electrical energy as the country of Chile in a given year and has a carbon footprint comparable to all of Hong Kong. Oh, wow. That is so much more than I thought it would be. That almost hurts my heart. That is crazy. Oh my gosh. Bitcoin mining needs to stop. That factoid right there just swayed me because this is Ethereum. This isn't even Bitcoin. And Bitcoin mining, I can only imagine what the equitable numbers are. And then if you extrapolate that out until the last Bitcoin is mined, oh my gosh. It's just crazy. We have so many environmental restrictions on everything, but we have nothing on crypto mining. I'm all for crypto. I'm a crypto YouTuber. Obviously, regulations are not great when it comes to crypto. We've been over that. Go check my other videos. There's been plenty of times that I've talked about my pessimism when it comes to the involvement of regulations and regulatory government or departments and cryptocurrency. It never works out well. But, the mining needs to stop. If it's that serious, if you're using as much electrical energy as the entire country of Chile and a carbon footprint comparable to Hong Kong, which is not an environmentally friendly place, that is bad. When the network-wide energy tally is broken down per transaction, Digiconomists estimate that a single Ethereum transaction uses as much electrical energy as the average US household does in an entire week. Note that while the Ethereum Foundation cites Digiconomist network-wide estimates, it claims that per-transaction comparisons to rival blockchain networks can be misleadingly framed. So obviously, we're not sure. They're saying it's not that serious. That seems a lot like me, like Will Smith in the movie Hitch, when he has that allergic reaction and his entire face is swollen up and says it's not that serious. You know, it's pretty bad. Whether it's an entire U.S. household for a week, whether it's that much energy, or maybe it's a couple days, that's still way too much energy to use for a single transaction. Ethereum dominates overall NFT trading volume and is where most of the highest value projects live, but there are rival platforms like Solana and Flow that use much less energy. I haven't really heard much going on Flow. Let me know in the comment section down below if you guys have got any NFTs on Flow or Solana. Ethereum Layer 2 scaling networks like Polygon and Immutable X, I used to be a huge advocate of Immutable X. I haven't actually thought about them in a little while. Use tech-like side chains and roll-ups and don't consistently interact with Ethereum's power-hungry mainnet. Nearly all of that nuance is lost when engaging with NFT skeptics, many of whom equate any use of NFTs, that is, blockchain tokens that represent ownership of an item, to wasteful poisoning of the earth, even when a more energy-efficient blockchain is used. In other words, because Ethereum has become synonymous with NFTs and because Ethereum's network is such an energy hog, many people that think that all NFTs are significantly impacting the environment. That's obviously not true. And it's likely why some brands refuse to use NFT terminology even when selling NFTs and minting them on more eco-friendly blockchain networks. It's become like, you know, there's plenty of things we use now where NFTs and Ethereum's network have just become one and the same, and people assume when you say an NFT that it's on Ethereum's network. Like, hand me a Ziploc bag. All bags aren't made by the brand Ziploc, but a very popular one is Ziploc. Like Band-Aid. It's a bandage, but Band-Aid became a very popular company, and so you just refer to it as that. Same thing with like Tupperware. Tupperware is a very, very popular brand, but it's just a container. It's a type of container. You guys know what I mean. In February, don't know how to say this word, but Canada released a report in February that claimed, that's redundant, that claimed that the Flow blockchain network, which powers NBA Top Shot, okay, that makes sense, and other collectibles platforms use just 0.18 gigawatts, I'm assuming that's what that is, gigawatts of energy across all of 2021. Wow. When split between all transactions on the network, Flow claims that minting an NFT demands less energy than a single Google search. I don't know how true that is, but the report pegged Solana's annual usage at about 11 gigawatts, meanwhile still a fraction of Ethereum's current estimated toll. Meanwhile, the Solana Foundation claims that when energy footprint is broken down, a single Solana transaction requires about as much energy as 2.5 Google searches, and 99.99% less energy than a single Ethereum transaction. Meanwhile, Polygon's own study suggests that its proof-of-stake sidechain validators use just 0.00079 terawatts annually, compared to about 80 terawatts on Ethereum. Granted, Polygon still taps the Ethereum mainnet to commit proof of its transactions, but even so, a single transaction via Polygon requires a fraction of the energy as comparable transaction done only on Ethereum. The problem with a lot of these is they're slow. Polygon is very slow, but it's way cheaper. The caveat will disappear with the merge, just like it will for the other Ethereum scaling networks like Immutable X and Arbitrum that run more energy-efficient chains that still ultimately roll up to Ethereum's mainnet. The entire Ethereum ecosystem will benefit in that way. More broadly, the entire NFT ecosystem should benefit from Ethereum's merge by effectively eliminating one of the most prominent and arguably most reasonable arguments against using blockchain tokens to represent digital ownership of things like artwork, avatars, collectibles, and interactive video game items. You can throw movie clips in there, sports clips, you can throw music in there. NFTs are used for so many different things. There was recently some company that used NFTs for people to sign a contract or something like that. It was some revolutionary first time it's happened type deal. with Ethereum ditching its prohibitively energy-hungry mining model. No significant NFT network will use proof of work or any substantially similar model. Bye-bye Bitcoin, right? There are NFTs on Stacks, a network that rolls up transactions on its own energy-efficient blockchain and commits them to Bitcoin's proof-of-work network, but it produces very little activity. Hence, if anything, that would kill it anyways. There's one wildcard in the mix, however. Some Ethereum miners apparently upset about the merge cutting them out of the equation plan to launch a forked version of Ethereum called Ethereum POW that still uses proof-of-work mining because it'll be a copy of Ethereum network as it stands before the merge. The fork will create duplicate versions of Ethereum NFTs. It's just, let it go, guys. Let it go. However, sentiment among Ethereum NFT creators is overwhelmingly in favor of the merge and proof-of-stake network, as Decrypt recently detailed. There may be some initial market action around the duplicated NFTs, but few expect Ethereum POW to find a significant ongoing base of users and NFT collectors. I completely agree. Not many NFT creators or collectors are going to want their name tied in with hating the environment and killing the environment and killing the planet or whatever that slogan is that they use against people. So it's huge. It's a great thing. The environmental critique will never really fit NFT gaming, as most of the major games in the ecosystem, from Axie Infinity to the Sandbox, use scaling tech to drastically cut down energy consumption anyways. Meanwhile, many other notable projects use energy-efficient chains, like Ubisoft's in-game NFTs running on the proof-of-stake Tezos. But the impact should be felt more widely than just in gaming, as the environment-killing argument loses footing. Ethereum still faces challenges ahead in scaling to accommodate larger volumes of transactions and cut down on skyrocketing gas fees, but the apparent lack of a huge energy footprint could ease some concerns around the network and NFTs on the whole. Eric Deep, who is a co-founder of Ethereum, said, assuming proof of stake puts to rest environmental concerns of NFT production, he added, I believe the merge will unlock a massive amount of creative potential energy on Ethereum and in the NFT creator community at large. That's awesome, guys. Making the largest NFT platform dramatically more eco-friendly isn't going to automatically convince critics, of course. There are still some misconceptions around NFTs and how they work, not to mention concern about rampant speculation and scams. Even if skeptics believe that NFTs are broadly eco-friendlier than before, the backlash could continue. So you never know, guys. I definitely wanted to bring this to you though. It was a long one, but it's a huge thing, because if there's one thing I know I hear a lot, it's that, it's not eco-friendly, that Bitcoin mining and crypto mining is really bad for the environment, but people really don't understand what mining is, so they think it's literally like digging up the environment or something to, it's hard once people get an idea in their head to pull that stigma out of it and get that bias away from them. But this really should put to rest in a quick, provable sense that Ethereum and, at least Ethereum's network and Ethereum's founders are dedicated and committed to the long-term sustainable life of cryptocurrency and their network as a whole, which is what you want to see hands down. Unfortunately, however, this could not keep Ethereum from staying above water during the merge. I just noticed that this is actually written by the same exact guy who wrote the last article on Decrypt, so shout out Andrew Hayward. He wrote both of these articles apparently. That was not planned in any way. Ethereum price crashes under $1,500 after the successful merge. It's worded in a weird way. It's worded in a way to draw your eye, because Bitcoin and Ethereum also dropped nearly 5% the exact hour as Jerome Powell spoke, and certain inflation numbers came out. Bitcoin dropped, as you can see right here. Bitcoin is under 20,000 at the time of this recording, down 1.76% in the last 24 hours. Ethereum down 5.89% in the last 24 hours, dipping right around $1,500. It's really testing that support line there. But this is a great example. Before we even get into what Andrew has to say, this is a phenomenal real-time, real-life example that you guys can see of when I say buy the rumor, sell the news. when all the rumor the last couple weeks, all the media, the PR really started to kick up these stories about the Ethereum merge, you saw a bunch of movement in Ethereum's price because of the rumors of what could happen during the merge. And it is very rare that any event is as really hype as it is hyped up in the promotion. Everything leading up to it, that's kind of why you always have a feeling of letdown when the event actually happens, because there's so much hype going into it. There's so much, this is going to be the biggest thing ever, and people give it such a huge, put it up on such a pedestal and make the expectations so high for this event, whatever the event may be, that when it actually happens, it's rather dull. It's rather boring. It isn't the big price you wanted. It didn't shoot up 1,000x. It only doubled or something like that, you know what I mean? Or you have a case like this where this really didn't require a lot of price movement. This was simply an upgrade on the network. However, a bunch of people figured something might be happening, so they invested in Ethereum. They invested in Ethereum Classic. They invested in another one, which I'm going to get to soon, that I think is going to have huge price fluctuations due to this merge. Comment down below what you think that cryptocurrency is right now. But Ethereum, guys, buy the rumor, sell the news, is very evident today. On the 15th, at the time of this recording, during the merge, after the merge being successful, it's not doing much, if anything, and it's down 6%, you know what I mean? If anything, it's down because not much happened. People sold the news. It actually happened and people sold. So, the Ethereum merge went off without a hitch from a tech perspective, but sentiment around ETH after the shift to a more environmentally friendly consensus model might be dipping. Today, the price of ETH plummeted below the 1,500 mark for the first time in more than a week. That is not that long ago. Am I the only one that feels like this year has been such a stair step down in pricing? And maybe it's just because I do this, that I have over 100 videos that I've done this year on cryptocurrency, but it seems like I'm still waiting for the recovery from January. And that, it's crazy. I was just thinking that, we've been dealing with this for 9 months now. Literally 9 months. It's September, guys. This is crazy. Bitcoin was $60,000 this time last year. This is wild. According to data from CoinGecko, ETH is down almost 8% over the last 24 hours to a current price of $14.85. It has bumped up, currently at a price of $15.13 at the exact time of this recording. That's a sharper drop than the rest of crypto market right now, which CoinGecko says it's down about 3% on the whole, with Bitcoin down about 2%. Initially, the price of ETH had remained largely flat over the overnight merge, hovering around the $1,600 mark, with slight ebbs and flows. However, shortly after 10 a.m. Eastern Time, this morning, 10 a.m. Eastern Time, markets open at 9:30. Do you see the correlation here? Okay, so everything moves with Bitcoin, essentially. Bitcoin's dominance is like 40% of the entire crypto market cap as a whole. When Bitcoin does something, Ethereum usually does something similar, and the rest of the market reacts to one of those two, mainly Bitcoin. Bitcoin, like I said in my recent video, and I made a short about it's starting to pop off on views, all you have to do to predict Bitcoin is watch the S&P 500 and predict that. I'd say all you have to do, it's easy and people are doing that, but the S&P 500 and Bitcoin have become eerily correlated, and when movement happens and when the stock market reacts, you have a big movement in Bitcoin, and now you're seeing with Ethereum as well. So it's, in my opinion, it is no coincidence whatsoever that after 10 a.m. Eastern Time, especially, literally New York City time, this morning, the price sharply dipped from about $15.85. I mean, it makes sense. That's, you know what I mean? Maybe this one isn't really article worthy, but the move is not altogether unexpected. In a report in early August, crypto analytics firm Glassnode flagged data on derivatives exchanges that indicated the merge was shaping out to be a sell the news event. I am so happy it just said that because that's what I prefaced this article with. The hype around the merge appeared to be generating bullish sentiment around Ethereum in July, but sophisticated derivatives traders were already hedging their bets, expecting the price of ETH to drop after the event, according to Glassnode. I didn't think I was a sophisticated derivatives trader. I just thought I had some common sense and could have my own thoughts and figured this out about the buy the rumor, sell the news. But just kidding, guys. I clearly knew that because of my sophisticated derivatives trades, as you guys know. Traders appear to be utilizing call options to bet on the ETH price into September, whilst futures and options backwardation indicate an expectation to sell the news is in play. Glassnode's researchers wrote in a report at the time. So that was back in August. They were betting on a sell the news play based on what they were seeing in the options chain and the buying selling chain that they were witnessing on the exchange that they were focused on. The merge is Ethereum developers' name for the long-awaited shift away from the original proof-of-work consensus model, in which thousands upon thousands of users run powerful computers to secure the network and potentially earn cryptocurrency rewards. Under the new proof-of-stake model, in which validators stake or hold coins in the network to process transactions, the network is estimated to use over 99% less energy than before, according to the Ethereum Foundation. And I will note, shout out Stock Mo actually, it will now become a deflationary asset because everyone's going to be staking, and the way they have the new tokenomics set up after this merge is, I believe it's like 1% deflationary every single year, which is incredible, guys. That way it will only increase in value as time goes on. While many Ethereum proponents were in favor of the merge, some ecosystem participants were less thrilled. For example, some have forked from the previous version of the network to create the new Ethereum POW, ticker symbol ETHW network, which will retain mining, while other miners have insisted starting mining coins like Ethereum Classic or Ravencoin. Those are the two that you might see. Ravencoin I kind of forgot about, and it's actually, I do remember, Ravencoin was named Ravencoin, paying homage to Game of Thrones, because in Game of Thrones, the people who send the messages use ravens, and the ravens deliver the messages. So that's kind of cool. Quick little fact to give you guys. But now that I checked out these two articles, both from Andrew Hayward, we're going to check out some price action of a couple different coins that are related to the merge. Starting out with Ethereum, ticker symbol ETH, and as you guys can see at the time of this recording, Ethereum is at 19% of the market dominance. The market cap is $185.434 million. I apologize, $billion. That is absolutely insane, with it being down 5% for its market cap. The volume in the last 24 hours is $27.8 billion, which is more than most market caps of cryptocurrencies. That's just how much has been traded in the last 24 hours. That's just wild. Those are crazy numbers. As of the time of this recording, right this second, we're sitting at 15.15, 39 cents for the price of Ethereum, down 5% in the last 24 hours. As you guys can see, this great big dip happened right about 10 a.m., and right after the stock market opened, right around Jay Powell gave his little speech and talked about inflation prices. It probably wasn't even him. He's usually only there for the TV appearances. I have some strong feelings on Jay Powell, the SEC, and, you know, all those lovely people that seem to do great things with our money and care so much. I did want to show you guys that the vote down here, 69%, so that's nice. But we will move to, because we do know, we just pretty much just read a whole article about the fact that Ethereum's down 5% on the day after the merge. Now we're going to move to our next one, Ethereum Classic. And as you guys can probably expect, with Ethereum being down, Ethereum Classic, it just flashed to red in front of our eyes, had maintained some positive price action today, and was rather positive, I believe, when I started recording, moved to around neutral, and is just now finally dipping, is down 0.18% on the day, sitting at a current price of $37.37. That's the second crypto in a row with repeating numbers, which is odd. The market cap is $5.1 billion. And the volume in the last 24 hours is insane. 2.9 billion, up 124%, which is 57% of the whole entire market cap has been traded in the last 24 hours. Those are crazy numbers. I mean, realistically, guys, looking at the year-to-date chart on Ethereum Classic, if you pick this up in July, right around $13, $14, you're feeling pretty damn good right now at almost $40. I mean, I can't shake a stick at these prices. I don't really stand for Ethereum Classic, especially now. It seems almost as if it's a protest to environmental friendliness, which is weird, but this should be, as this guy said, this is a very good point. Ethereum merge could be one of the most significant shifts in crypto history, which is factual, absolutely, because this is paving the way for all future projects. They know the most successful network ever outside of Bitcoin's Lightning Network. But really, realistically, when you talk about a network, not a store of value, not a crypto coin or token in and of itself, but a network, Ethereum is the most influential network of all time. And I don't know if you guys just saw this little animation they did up here, but that was pretty cool for Ethereum. Now, Ethereum Classic, as you guys can see, it's got some crazy volatile price movement over the last little bit. You know, just in the last couple days, you could swing it for a few bucks here and there. Over the last month, you could swing it for about $10. In the past 3 months, you could have gotten it for, like I said, in July, between $12 and $15, and at the current price of almost $40, you'd be making out pretty well. Now, this is a cryptocurrency that I think you guys should really watch. Not financial advice, not an indication of I hold or sell any cryptocurrency talked about in this video or on this channel. However, Ethereum name service could go parabolic. 289 million is the market cap. Fully diluted of 1.4 billion. There is only 100 million in the max supply. Only 20 million, which is only a couple million more than the total supply of Bitcoin, is in circulation currently, and it's at $14.32. Down 1.8% on the day. Guys, this is a banger. We were looking at $40, you know, upwards of where Ethereum Classic, okay, we were just talking about the fact that you could buy Ethereum Classic for 13 or 14 in July, and those gains would be looking excellent at almost $40 right now. Starting off this year, Ethereum name service was sitting at $39 or $40 and is currently sitting at $14.32. The volume is down 1.62%. And that is 38% of the entire market cap of Ethereum name service has been traded in the past 24 hours. And that's down. That means it's had consistent volume. So obviously the price action hasn't been anything wild or out of the ordinary. You know, when you see big lines like this in the same day, it's because it hasn't really done that much. You know, you're talking about 1380 to 1463. That's not that crazy of a price swing in comparison to different cryptocurrencies, and it's held rather consistently through a huge period of downward pressure. Over the past month, it dipped down as low as 11 and is right around 14 again. If you could get it sub $10, sub $9, you were just doing so well. And I mean, last year, guys, we're talking about Ethereum name service was well over $80. If I can get it right there, $81.69. That's nice for the cents. And this is a cryptocurrency that I have been very bullish on. The .eth, whenever you see anyone, Twitter handles are very, very infamous at this point for the .eth. And it's the same thing, in my opinion, as the .com bubble. When you talk about the internet bubble, the late 90s, early 2000s, anything with .com got bought out for a bunch of money. .eth is going to be the Web3 version of .com. It's literally the new web address for the Ethereum blockchain. It just makes sense that this is going to be huge, guys. And I mean, just the fact that people are going to buy Ethereum name service names, domain names, to sell later on, just so big name, you know what I mean? Like pets.com. What did that do? Absolutely nothing. People made a bunch of money off of it, though, because it was pets.com. I mean, what a friggin' name, right? Crypto.com definitely got, I cannot imagine how much they paid for that domain name, but those are the things you need to think about, guys, because this is the future. No question, now that Ethereum completed its merge, the real merge from Ethereum to Ethereum 2 is here. It's happened. It's real life. The crypto world, as we know it, will never be the same. Period. There's no way that it ever could be. This is an unprecedented change from arguably the biggest cryptocurrency network in the world. I mean, it really doesn't get, I'm trying to articulate in a way that isn't too extravagant or dramatic or hyperbolic, but this is revolutionary and a date that will go down in crypto history forever. September 15th, 2022, the merge from Ethereum's proof of work to Ethereum's proof of stake was completed, and nothing will ever be the same. Alright guys, that's going to be the end of the video today. I hope you guys enjoyed it. It was a long one. I had a bunch of work to do in real life to try to help make up. If you guys didn't know, go check my last real video. Well, second to last real video. I got hacked, lost all my crypto, but I should be making a new video here talking about some crypto that I just picked up. That's the good part about starting over, is I can give you guys some updates on new cryptocurrencies that I'm investing in now, because I feel like I'm just getting into it again because I friggin' lost everything. I appreciate Alfonso and Mark so much for donating and giving thanks, whatever it's called, the super thanks, super chat type thing. The fact that you guys gave that much, you didn't have to do that, you know? It's just, it's so cool. Thank you guys. For real, from the bottom of my heart. It really, really helps. When that next YouTube check comes in, that'll be on there, and I'll be loading up the MRI bags, and keep your eye out for the next video. Gonna have some more news articles coming out, guys. I told you guys I wouldn't be going anywhere. Even though I got hacked, I'm still here for you guys. There's still crypto news coming out. The Ethereum merge is still here. It's popping. So keep your eye out for new videos. Hit that subscription bell notification so you never miss an update on a new video. Always like the video. Comments always help the algorithm. Go ahead and share it with your friends, guys. If you know anyone who doesn't have any money, show them the channel. You know what I mean? Let's all win together, you know? Generate that generational wealth together. So put a flexing emoji in the comment section down below. As you guys know, if you enjoyed the video, and other than that, stay safe, stay hydrated, always lock your MetaMask accounts.